All right, welcome to another weekly update and review session. Today is Saturday, April the 20th, and let's take a look at last week's performance and what happened in the account. Let's start with the market first, and just to put some context around what's going on, we are as we can see right here, we've been down for the last couple of weeks. And if you take a look here at the top, from the top to the bottom, we're looking at around just under 6%. And just wanted to make sure that everybody knows that this is just a regular little pullback. There is nothing to worry about. We have to be ready for pullbacks like this. Even if we just look back a few months, you can see that we had a pullback like this in October. And then even if you take it a little bit wider like this, you're looking at the around 11% pullback. So this is normal. This is mostly healthy unless you are overextended or overexposed. And then you might feel a little bit of pain. I myself was slightly a little bit overextended, mostly because of the hedge allocation that I was testing. I was testing something with a little bit like a 10% allocation, which caused me to sell more premium and have more naked puts going on. And when the market pulled back, I was hurting a little bit more than I should normally hurt with my standard, 18-20% CAGR and a little bit of hedge. But this is something I'm still fine tuning. And right now I'm going to be testing 18 and 3. And let's take a look at the performance actually week over week. We are down 2.8%. And the market is down 3.8% for the week. So we're doing a little bit better this week than the market is. And here, this is what it looks like. And hopefully we slow this down next week and start reversing. And year to date, we are still 1.8 up. Market is a little bit better, but we are still in the positive. And if you take a look at the realized, I generally look at the net lick, but since I have it here, I might as well take a look. In the realized P&L, we are doing just fine, slightly above the market, and all is good. All right. Everything is fine. I did have one stop loss on Friday. That's the first one for the UOT strategy. We can see it right here. So we stopped on 6 MES naked puts at 200 loss. Bid-ask spreads get wide. So, I was chasing this to close and ended up closing it just under 200%. But it was right above 200% when I tried first to close it. And so we booked 1,600 loss, but we offset a good portion of that with Zebra trade that we closed as well, right about the same time. So this was the first Zebra I put on a few days prior, and that one built up to just over 900 and took a big chunk of that loss. And then in addition to that, I also rolled down long put of the put debit spread. I rolled it down, then booked 15. Well, that's $75 credit. Now this formula here is for showing the loss because it's actually a final. It's not meant for this, so I have to work on this to show it a little bit different. But what it is, once you close or the put debit spread expires, it shows a loss here. So now it just shows a loss that is less than it would be normally because we got some credit for closing it. But basically, I rolled down a long, and instead of having what was it originally, 125 wide, now I'm left with 100 wide, and I booked in $70+ of credit. So between that 75 and 900 and change, so we got around $1,000 offset with that, and that's pretty good, bringing that down without closing too many put debit spreads. So we still have a bunch of them going on into the next week. We have around 9,000 worth of put debit spreads, and if the market continues to go down, we'll be able to close some of them. Now we do have a couple of trades that are somewhat challenged. 150, 120, those are the worst as when it comes to P&L at the moment. So there's a chance that this one might be challenged on Monday. and we'll take a look at that. But I also opened another Zebra right after, a couple of days after I opened the first one, and that one is showing right here, the Z2, and it's showing, a couple of hundred, 250 in profit at the moment. And then after that, as my deltas, I go by my deltas, so as they reach around 0.4% of my net lick, I'm looking into adding a new one. And so I did these two. And what will happen is if we continue to go down, then this will show a little bit more profit before I have to close the naked put. And if that happens, we'll just close this one as well, get some profits from that one, and we'll definitely be able to close more of the put debit spreads, whether we close just roll them down a little bit to capture some of the gains, or maybe close some of them completely. We'll see. And just before the close, because I was still a little bit high in the deltas, I spent I think like $35 on the very short put debit spread, just in case something gets a little bit wild over the weekend. We have a little bit extra protection, but that's gonna expire worthless, and I'm not gonna do anything with that unless something happens and I have to cash in. That's where we stand. So everything is fine. I'm pretty happy with where we are. We'll see on Monday, and I think unless there's any major downturns, we will slowly start adding another trade sometime next week. Well, it's gonna depend on our deltas, our notional exposure, and things like that. But since we closed 6 MES naked puts, we lowered our notional exposure a little bit, so that helps. And what else? Yeah, I need to see how to capture. The spreadsheet doesn't account for capturing partial profits on the put debit spreads, but I'm having some ideas. I think I'll do some changes around that. But that's all I have. 2 Zebras going on and 1 little put, and that's it. I hope you have a fantastic weekend, and like the video, please, if you find it useful, and I'll see you Monday. Bye.